Okay, let's look at some examples of the accumulation distribution indicator in action. And as I said in the introduction, it really does give you a very visual perspective on those areas of support and resistance, but much more importantly, the strength of those areas. And that's defined by the number of times each area has been tested and held. And consequently, that is represented by the thickness of the line. So as you can see here, this has been tested a couple of times, so relatively minor. We've had some more minor ones here, but the one I really wanted to focus on is this one at the top. Very, very strong, what was acting as resistance. You can see the number of times that it's been tested, retested, had a minor break, came back down, retested again, constantly retesting. Now we're running in real time, and we've actually finally managed to break through that region, and on this last candle here, we've actually held above it. So this level here, which is extremely strong, is now was acting as resistance, of course, and is now acting as support for the move higher. So it just gives you that instant visual perspective on support and resistance from a price-based perspective. Remember, with the volatility indicator, we get that perspective from the from volume on the volume histogram. But when we look at it in the traditional way here, which is support and resistance, you don't have to draw lines. It's all done for you automatically by the indicator. And the reason we call it the accumulation distribution is because that's what's happening at these price levels. We're moving into congestion, we're accumulating or distributing. It's acting as support or resistance in those areas. And then obviously as the price action moves forward, as indeed here, we now have the comfort, if we're going to trade this to the long side, we have this very strong platform of support now in place from a price-based perspective, and it's a very visual representation of it. And of course, each time these are tested and held, the thicker they get. The other aspect to the accumulation distribution indicator, which we're also going to look at, is these little clusters. When they appear on their own, such as this one down at the bottom, this has perhaps been tested only once. When you get up to a cluster of them where you have two or three like this, individually they may be relatively weak, but where they start to cluster together, then they become much stronger. And that, as you can see, acted as support on this occasion for the reversal down. Shot straight through there pretty quickly on this move higher, this rapid rally higher. And now we're through on to the next level. The number of times they've been tested is denoted on the side here. You can see it here. And over on the left-hand side, you'll see the actual level of that particular support or resistance region. And this is perhaps another facet of the indicator that is perhaps obvious. It's perhaps, when you start to think about it, it is obvious. But these levels are pinpoint accurate. We're not talking about, as you've seen probably elsewhere on indicators, a big block of support and resistance region which is shaded in quite a wide area. These are literally down to the price level, so they are pinpoint accurate. And you can see it here, the way this is tested. So, of course, in any technical analysis, as I've said in other videos, you do have to apply a little bit of leeway. These are absolutely pinpoint, but even so, you have to allow a little bit of leeway. We managed to burst through there. We managed to burst through there. We came back in again. We managed to claw our way slightly through there and come back down again. So this is what you have to do. You have to allow a little bit of leeway, bearing in mind the fact that these are, as I say, pinpoint accurate and literally to the nearest point or the nearest pip or the nearest level of that particular instrument that you're trading. You can see here we're coming back down to retest it, so it's now acting as good support. And of course, the other key aspect about this indicator is it's excellent for giving you some visuals on where to place your stop loss. So if you've got these strong levels, or perhaps you've got a cluster down here where it's giving you some extra strength, those are the levels you would look at for potential placement of your stop loss. So that's on one time frame. Let's just flick up to some others here. Let's go up to 15 maybe. See what we can see here. Okay, we've got quite an array here. Now, one of the things I will show you in another video is you can Reduce the number of levels if you wish, so you don't have to. This is at the default level. This is set to 0, so I've got all the levels that I can possibly have on the chart. But you can adjust that. You don't have to have all the levels on. You can reduce it so you've just got the major levels if you don't want to see all these minor levels as well. What do we have here? We've got a pretty strong level here. This has been tested 3 times. We've got some more minor levels above there coming into play too. Nothing particularly, certainly nothing as strong as on the previous chart, on the 5-minute chart. But of course, again, it's a facet of multiple time frame analysis. What you would be doing is you would be looking at that particular chart. You'd be looking at the slower time frames, be going up to the 15. Let's have a quick look at the 30, see what we've got there. Let's go up onto the 30-minute chart. There we go. Here we have some more defined levels. We've got a nice level in here, which has capped off this this progress higher here. We've got a very strong level down here and one below it, not quite so strong, but certainly strong here. This one, you may be able to see the number here. I'll zoom it up in the video. This has been tested 5 times. So in other words, it's been tested and held 5 times. If it's tested again, it'll go to 6 and 7 and so on and so forth. So each time these are tested, they will become stronger. They are like the Popeye cartoon. He eats the spinach. It's an analogy I've used many times. I can't think of any other way of describing it. But with Popeye, he eats the spinach and his muscles grow, and that's really what you're seeing here. It's almost as if they're strengthening on the retesting, and they're thickening the lines, and they're giving you that great visual perspective on the support and resistance regions up and down the chart. So I hope you've enjoyed this particular video. I'm going to do a load more as well, so you get a good feel for the indicator. So thanks for watching. See you soon, and bye for now.